In today's video, we're going to discuss the three main obstacles to investing with Yieldmax funds when trying to live the FIRE lifestyle. So we earn over $150,000 per year in dividends at this channel. It's finally showing 165 now because the IWMY dividend is showing up. But this number will drop back to around 150,000 per year once the new dividends for Cornerstone are announced, because we usually get a cut to Cornerstone every year. But that's no surprise. You just have to play the fund properly. My performance and value shows that I'm up 27% for the year, and the S&P is up 19%. So we're beating the S&P. We were beating all indexes this year, even the NASDAQ. We were up 50%, but we had a rough month during October for all closed-end funds, not just Cornerstone. So it wasn't Cornerstone that brought me down. It wasn't my margin plan that brought me down. It was just I invest in a lot of closed-end funds, and they were all down pretty significantly during October. But now we're seeing a pretty nice bounce back. So I'm living the FIRE lifestyle, and so can you. Email me for my e-guides at aikentod48@gmail.com if you're interested in doing the same. So the first obstacle that I usually come across, especially after talking with clients all week about their fears in the marketplace right now, these are the three main issues I have come across. Okay, first is they get wrapped up in stock risks. Okay, so this performance that you're seeing that I'm getting here, this is mainly because I'm in some stocks, but I manage my position sizes with stocks. I don't put much in stocks. I can't lose the stocks. When you buy stocks, you run the risk of playing the casino, so to speak, and you get all wrapped up in your emotions as well, and you can lose with stocks. So I manage my position sizes accordingly. I have about 1,000 in each of my stocks, 1,000. $2,000, let's say here in Square, I have 2,500, maybe I have 12,000 in a Tesla, but it's a large part of the indexes and it has a large dividend. So that compensates me for my risk taking there. And again, the position size is so small in Tesla that I really can't lose. I mean, when you look at my account size, 400,000, let's say, and you have 10,000 in Tesla, that's less than 10% of my account, much less than that. 10% of my account would be like $40,000. So it's not even 5% of my account. So position size management is key. And then you always go with the indexes. That's another thing that people don't understand. When they're tied to the stocks, then their emotions are all over the place and they can lose. Stocks might not bounce back in a market recovery, but the indexes always do. Plus, the indexes don't fall by as much as the stocks. So if you're a follower at this channel or even a newcomer to this channel, you need to know that I invest in mostly indexed funds like Cornerstone and Defiance. So CRF, CLM, I have about 400 grand in. JEPY and QQY, and IWMY, I have about 100 grand in. And the Yieldmax funds that I have 15K in OR because they're indexed, but all the other ones I just showed you are about $1,500. The reason why I put most of my money in Cornerstone and not Defiance is because Defiance hasn't proven itself yet. Cornerstone has been around for decades, okay? Cornerstone is also a 5-star fund, which if we go here to the Morningstar chart, again, for all newcomers, there's CLM and CRF. CRF is a 5-star fund, so I can't find anything higher ranked than that follows the indexes, and that also has a large dividend. So 20% dividend for Cornerstone, and it beats the indexes, as you can see here on the charts. And a lot of people ask, why do you buy Cornerstone when it goes down? Well, you have to look at the charts here. You have to factor back in the dividends and the drips. Also, Cornerstone has a special program where it drips the dividends at the NAV. So we just got our drips today. Many of the clients at the channel, we've been waiting for our Cornerstone drip. Not only, again, does it give you a 21% dividend, and it gives you days gain. So we're up a couple thousand in Cornerstone today alone. But it gives you the 21% dividend drip down at the NAV. So for anyone else who's getting tired of me saying Cornerstone drips its dividend at the NAV and I'm bringing up Cornerstone, well, this is a total investment approach that I'm running here at the channel, and Yieldmax stocks have to be complemented with index funds like Defiance, like Cornerstone, like JEPY, like JEPQ, like Schwab D, Devo, but none of those have dividends that I'm interested in. So I go with Cornerstone because it has the biggest dividend and a special drip at NAV. You see these $6 lots where the dividend is around $3,500 because we get about $3,500 from each Cornerstone fund each month. Well, we get an 11% gain on top of that. A few months ago, we were getting 30% gain. So we were getting thousands of dollars free and clear every month with these Cornerstone drips. Okay. If you don't want to own the drip, you don't want to keep reinvesting in your shares, then just simply sell the shares. Okay. And that's what I did today. That's why you're seeing this loss, by the way, this 5,500 in losses, because I sold some Cornerstone shares today. That knocked my margin debt down to 145,000. Okay. So my debt was 155. Now it's 145, and I'm in line with my debt reduction plans. I plan to, if I make 150,000 in dividends per year, then that's going to pay back my debt in less than 1 year. Also, these dividends this debt doesn't show up on a credit check, and it's low interest. I've negotiated my interest down a couple of times to around 6%, and many have done the same. When you buy my e-guide, you get my phone number, so you can call me anytime, okay? You also get free access to Discord for life, which I don't know of any other channels that offer that. So I use this margin debt, which doesn't show up on credit checks, and I pay it back with my dividends each year. But I also have bills. I have about 50,000 of bills per year, so I'm going to pay down about 100 grand of my margin debt by the end of the year. And so I have ways that I'm going to actually unload that debt. It's going to be through the rights offering in Cornerstone, which again, well, I don't know if I told you this, but you must play Cornerstone properly. You can't just buy these closed-end funds without understanding they have rights offering. So that's what my Volume 4 e-guide's about. If you need help playing Cornerstone, you can contact me for my e-guide there. When you buy my e-guide, you get free access to Discord, which then we alert you of the Cornerstone rights offering. We have many channels at Discord, okay? We have a Bitcoin channel, a Yieldmax channel, a Cornerstone rights offering channel where we alert you of the Cornerstone rights offering. And we also have my portfolio there, so you can track my portfolio when I'm not making videos on YouTube. Again, Discord's free when you buy my e-guides. So Cornerstone and Defiance, okay, I'm sticking with mainly indexes to avoid stock risk, okay? I keep my position sizes small with stocks, and I put a bulk in the indexes. And then when you buy the indexes, what else are you going to buy besides Cornerstone? So that's the highest truth of investing that I know of. So I buy Cornerstone, and you just have to play it again properly, time it around its rights offerings, and toggle that special drip. And if you need help with the rights offerings, I have an e-guide on that. Okay, so the other thing you can do with stocks, if you have a lot of stock exposures, you can buy the inverse hedges to them. Like if you're going to buy a Tesla, you can buy a TSLS. But I don't even get myself wrapped up in that either, because you lose to shorts over time. And yes, I've put on shorts a lot because I have so much leverage on that I make sure to keep shorts on for protection so I can sleep at night. But it's best just to manage your position sizes. Don't have such a big position size and you won't need to short it. And then put the bulk of the money into the indexes. That way you can short easier towards the end. You can short against the indexes better than you can the stocks. Okay, because you can buy married puts, you can buy put options, you can box Cornerstone and sell it short. There are more options to protect your portfolio when it's indexed with ETFs rather than stocks. Stocks can have a mind of their own. Okay, so the second issue that I come across when trying to invest with Yieldmax funds to live the FIRE lifestyle, a lot of people describe these issues to me. I would say the next issue is just obviously financial literacy. I think a lot of my clients are getting more privy to understanding debt, but the rest of the world does not know this stuff, okay? And they just think margin's taboo, but they don't understand that this debt doesn't show up on a credit check, and they don't understand maintenance, okay? So this available withdrawal number that I have here, this 227,000, that means that I can withstand a 30% correction, I always say, 30% correction, and withdraw freely out of my account. Okay, to live the FIRE lifestyle, you have to be able to live out of your account, and you have to qualify for loans. Okay, so all of these dividends that I get from the debt qualifies for loans to banks. So you can get a house, a car. You don't need to just acquire loans and ask for personal loans or business loans. You can just simply, sometimes you have to buy a car or a house to live. So that's what these dividends qualify me for. Stock trading does not qualify you for income to banks, okay? They need either a job or dividends. So people don't understand the credit check aspect of things. They don't understand how it builds qualifying income, dividends, and using debt and cash flow, but they don't understand maintenance. So that's the biggest thing. So my available withdrawal is really high here, and I can withstand a 30% correction and withdraw on top of it. And even if you're not using margin debt, you still need to understand maintenance, which is in my Volume 3 Margin E-Guide. Let's go to a chart of JEPY and go to a snapshot of it, and you'll see that its maintenance is 50%, okay? 50% maintenance. That's for JEPY and Defiance funds. The same goes for most Yieldmax funds. Okay, they are 50% maintenance. So if we go to a Tesla, you'll see here 50% maintenance. Okay, snapshots, view margin maintenance requirement. Okay, 50%. This is a big problem. This means for every dollar I put in, every $100 I put into JEPY or Tesla, then $50 of my equity is taken up. Okay, in order to live the fire lifestyle, you have to go with low maintenance names. Okay, and that's what Cornerstone also is. It's low maintenance. It's 30% maintenance. So it's even lower than JEPQ maintenance for me. Now, you can go and get lower maintenance at other brokers. All right, you can get Yieldmax names at other brokers for lower maintenance, but they don't have the special drip for Cornerstone. So all roads point to Cornerstone for me. There is no alternative, Tina, to Cornerstone. It has the strongest bounce back potential. It has the lowest maintenance, the highest dividend. It's indexed. It drips its dividend down at the NAV. So there's really no better fund out there than Cornerstone. And so I can put all my money behind this. And that leads me to my second point. Okay. And again, if you need help understanding maintenance, that's in my volume 3 e-guide. Okay. How to use margin and dividends to live financially free out of your brokerage account. Now, again, this brings us to my second point, okay? People don't understand using indexes, and they don't understand the power of compounding, okay? So yes, maintenance is huge for keeping your available withdrawal high, okay? You need low maintenance for that, and I do that with the indexes, okay? So the indexes allow me to keep my available withdrawal high and withdraw large drawdowns. I can withstand large drawdowns in the account because I'm tied to indexes, not stocks. But then on top of that, I get compounding power. Okay, when you put 400 grand in something, you can make thousands of dollars easier than with 10 grand in something. So if you have 10 grand in a Coney, you would need 100% gain to make 10 grand. Whereas with Cornerstone, on 400,000, all I need is a 2% move on the day, and I can make around $8,000. So the power of compounding is huge, and I don't think a lot of people understand compounding. Okay, and you do so with indexes, not stocks, because you don't want to put all your money behind a stock. You could lose and get burned from the headline risk. So you put everything behind the indexes, and that way you can have larger position sizes, and you can sleep at night. And you can scale your account safely. You cannot scale your account safely with stocks. I mean, you can for some time, but you never know when the music's going to stop for them. So, that's the thing. Understanding maintenance, that's a big problem, and not understanding compounding. And you use indexes to accomplish both of those needs. Okay, you use Cornerstone, in my opinion, or JEPY or JEPQ. You use Cornerstone to have or those other index funds. This isn't necessarily about Cornerstone, but please just find me a better fund than Cornerstone. You use those indexes to not only lower your maintenance, but to get more compounding power. Okay, and you can have larger position sizes in those indexes versus stocks. Okay, the other thing people don't understand, this is still on my second point, okay, about financial literacy and good debt. See, 70% of our GDP is consumer driven, okay? We have strong jobs as well. We have record low unemployment, okay? So this means that if we have really strong jobs, this is why I never thought a bear market was coming in 2023. This is why I was buying hand over fist in 2022, because even though rates were rising, they were still low historically, and everyone was employed. I mean, most people were employed. So if 70% of GDP is consumer driven, that means that as long as we keep buying food and cars and clothes the way that we do, as Americans, and putting everything on credit cards, then even if everyone's bankrupt, the corporations are still making their money. Okay, so the GDP still stays strong, and then if we have a strong GDP number, then that's great for stocks. Obviously, corporations plan to do, they expand their projects when GDP is expanding, and so this is how the economy works. But again, it's 70% consumer driven, not driven by, let's say, railroads or McDonald's. It's the consumer is part of all that. So if you understand that the economy is 70% consumer driven and we have jobs, and there's really not a whole lot to fear, because this system's going to keep going. That's what this country is built on, is jobs, and that's what we're taught in school, is how to get a job. That's what everything is about, and that's probably why no one understands the finances, about debt, and understands investing properly because they're just told to work a job and then they can retire on their 401k someday. But time is money, and I don't even think that having 2 million to retire on is enough. By the way, with how strong inflation is, even though they say inflation's coming down. So another issue, this is the third issue I come across, okay, and it's just people, all right? People, they can sway you wrong, okay? People, they get swayed by other people to sell out. They're told margin is taboo. They always think that the sky is falling and the market crashes are coming soon. And I got to tell you, if a black swan was coming and everyone knew it, then it wouldn't happen, because black swans, by definition, are things that people can't predict, that no one saw coming. So, and I want to back up to that last point about financial literacy, because everyone thinks it's, with the jobs, they think, they can just keep spending on credit cards. But I spend on my margin debt because it's the lower interest in a credit card. And when you have debt running up on credit cards, it's bad for your credit, and it's just terrible for your interest. It's like a death spiral to become financially free. It'll never happen. But if I'm spending on my margin debt, it's much lower interest, and I can buy cars, clothes, shoes, whatever I want with this margin debt. I swipe my E-Trade credit card, go wherever I want. My credit and debit and checking card, I go wherever I want in this world with E-Trade. All my bills are automated out of my account. I don't go through credit cards. The only time I use credit cards are to get the cashback points first, then E-Trade pays off those credit cards. Okay, but back to the people. That's probably the biggest issue that people have with investing, is they talk to other people, and when you talk to other people, you can get swayed the wrong way. Okay, so margin is taboo. They just don't understand debt. Go look at, the rich. Look at how Elon Musk bought Twitter with margin debt. So, if the sky is falling and a market crash is imminent, Warren Buffett doesn't believe in timing. I don't either. And if you think the black swan's coming, remember, no one knows when a black swan's coming. So no one knows anything, especially for black swans. And always remember, too, that no one knows when to buy, not even Buffett. So no one knows when the black swans are coming unless you're Michael Burry with The Great Short. All the doom and gloom people, all the people who strike fear into the heart, I've been seeing them lose. All the bears lose over time. Statistically, the market goes up 7% per year, so it's not a good idea. If the market averages 7% per year, why would you ever be negative? You should just look at every dip as an opportunity to buy, okay? And if you think the end of the world is coming, well, that doesn't even matter, because money wouldn't matter if the end of the world comes. I never understand people's fears about black swans because they can't predict them, or the end of the world coming, because then, again, money wouldn't matter. I don't need any more protection either with puts right now, because my margin debt is so low. Okay, I'm not really worried about a black swan crash. I'm in it with everyone else. Okay, put options help when I'm using a lot of margin. When I'm not using so much margin, I really don't need that insurance. I'm not scared. And you know why? Because the dividends cash flow me and double my positions in a short amount of time. And the dividends just keep giving me qualifying income to banks. So these dividends, no matter what the market does, if Cornerstone falls 20% because the market falls 20%, well, then I break even because the dividend is 20%. And if I hold Cornerstone for 5 years, well, then that's 100% payback. Okay, that's much quicker than real estate. The only thing that I have to worry about in my account is the rights offering happening for Cornerstone. That's all I watch every day, because that's the only thing standing in the way between me and financial freedom. And again, that's what everyone on Discord is watching. We have, again, over 500 members here in this chat room who are watching for that rights offering. And we even have an RSS feed hooked up in the Discord chat room that's going to alert us of the rights offering, even without me looking. But just to be sure, I'm always going to be checking Cornerstone's website for that rights offering. So just remember, guys, when Main Street is struggling, the S&P can continue to dominate Wall Street, okay, because they can always engineer their share prices. I said this in 2022. I was pounding the table saying that they can increase their EPS by share buybacks, dividend increases. They can retire debt. They can lay off people. They can invest in automation. So you can always find a way to engineer your stock price to go higher if you're a company, and that's why you need to bet on the S&P 500 companies and stay invested at all times, okay? So stay invested and try to avoid the 3 snares that I've listed earlier in this video, and get educated on maintenance, okay, which again is in my volume 3 e-guide. And try not to get wrapped up in stock risks, okay? Please avoid the stock game. Buy small amounts of stocks and concentrate most of your funds into indexes like I do. Particularly Cornerstone is what I choose, but that's up to you. And if you need help playing Cornerstone, that's in my volume 4 e-guide. So I think that'll do it for the video, guys. If you need help doing what I'm doing, again, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord for life and my phone number for life. So just keep that in mind. Okay, if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.